Hello, I'm Virginia Bailey, the real estate lady with Berkshire Hathaway Home Services Chicago, and I'm here to give you a real estate market update. So let's get right into it. For the week of January 16th to January 22nd, mortgage rates dipped lower. Mortgage rates dipped early in the week to their lowest point in 2022, then stabilized and inched slightly upward by January 22nd. Markets continue to expect multiple Fed rate cuts later in 2026, potentially bringing the Fed funds rate down from 5.0% to 3% by year end. Okay, you can see that we have no red, that's great. We have green, that's very good. And I want to explain a little bit about the Fed funds rate. I don't want you to be confused by the information stating that potentially bringing the Fed funds rate down from 5.0% to 3% by year end. Last week, I showed you a chart and I told you that all the green that we saw last week does not tell the whole story. And I showed you a chart. And I told you a story has a beginning, a middle, and an end. In the middle, there's a reversal. At the end of the second act, there is a dark moment. We experienced our story, and I showed that you can see that we had a beginning, everything was just in our ordinary world, and then there was this big reversal, COVID. And that meant that we had to figure out new tactics to get back to our ordinary world. If you look at it in terms of our story. Oh, I also told you that we're not going to go back to those interest rates of 2.75. Something horrific would have to happen. So, because I want to make sure that you understand about the Fed funds rate. Now, the Fed funds rate is an overnight interest rates that bank charge each other to lend reserves and is set by the Federal Reserve. An example would be savings account, credit cards, and short-term business loans. Now, mortgage rates are long-term rates, like 15 to 30 years. These rates are not set by the Fed. However, when the Fed raises or cuts the Fed funds rate, mortgage rates often move in the same direction, but not at the same pace, not one for one. So the bottom line is the Fed funds rate is a short-term rate and the mortgage rate is a long-term rate. And the mortgage rate is influenced by the Fed funds rate, but it's not set by the Federal Reserve. Okay, so are you ready, willing, and able to sell or to purchase property? Listen, I would love to tell the story of your particular house and sell your house. That's what I do. I love doing that. I'll give you 110%. You just tell me that you're ready, willing, and able to get started, and we will say, let's go. All right. If you want more information about these mortgage rates and the Fed funds rates, call me and I will be happy to refer you to Prosperity Home Mortgage lenders that I work with, Eric, Randall, and Monica. And Monica is bilingual. Okay, so are you ready, willing, and able? Let's go. And I am Virginia Bailey, the real estate lady. And I'm with Berkshire Hathaway Home Services Chicago. And I can't wait to hear from you, okay? And stay warm because it is cold out there. It is cold. Baby, it's cold outside. Yes, it is. So stay warm, stay safe, and I will see you next week with more market update.